Hello friends, this is Raj Sastry from Raj Option Trading. Today is October 6, 2021. I want to cover quick trading preparation for today. So with that we will talk about market update, stocks with a big price drop yesterday, and stocks with the rule of 40 where gross margin plus sales growth greater than 40% and low RSI. These are the strong candidates you should consider adding to your portfolio. Then we'll notch it up a little bit. Also, look at the stocks with the rule of 40, low RSI, as well as net margin greater than 10%. These are the companies that are making money. I think these are the great candidates. And then we'll go a step further and look at stocks with the rule of 40. These are great fundamental companies and also with the low debt. So these are really great companies. You should look at some of these and see if it's worth adding to your portfolio. And last but not least, we look at strong companies with the rule of 40 and also where insiders or institutions buying. These can be good catalysts. So with that, let's jump in and get started. For the market update, let's quickly go to Thinkorswim platform from TD Ameritrade. So let's jump in here. So as you look through here, so we got futures here pointing to a lower opening today. As I expand this a little bit, as you can see, your last few sessions, right from somewhere in September beginning, we are having a down time slowly. So we got to be careful. So we got some big up candles as you can see here, then bigger down candles. So typically this is the lower low type pattern here. We got to be a little bit careful here, trade carefully. And when there is a big drop, don't buy too much, buy slowly and accumulate quality stocks. So generally trend is downward right now. There is a negative bias. Typically that happens around the September October time frame. That's why we got to be careful here. There are big candles and there are big green candles and there are big red candles. So we got to be careful here. And looking through the candle here, it's as you can see here, it's not one of those candles where it's a hammer. It's really balanced candle. That's why you got to be careful here. There could be some sell-off here. Unlike when you say a candle, something like a hammer here, that tells you there could be something going on, that there may be uptime. For example, a candle here is a typical hammer that tells you stock may go up. But this one, it's not a hammer, so that's why you got to be careful here and trade carefully. Buy some quality names. Next, we'll go into Nasdaq 100 here. Same story, right from September beginning. Typically, there's a downward bias here. The growth names are going out of style here, and this is where people are becoming more defensive. So what we'll do is we'll pick up some quality names and stick with them. So I think that will get us through this, weakness here. And as you go through Dow Jones Industrial Average here, similar pattern right from September here. This is even from August 17th. We have a downward bias here. I think we'll be careful here also and trade carefully, pick up some quality names. The key is to go after quality names so that way we are well positioned. And next we'll look at Russell 2000, similar trend here. Russell is up and down for most part, all-time high somewhere in 9.3, and from there onwards we are kind of dropping sideways. Russell is also weaker. So with that, you might wonder, hey, what's the news? Why market is coming down? So we can go into a Thinkorswim, a live news here. So as you can look through here, this is basically for ES or S&P 500. Looks like futures are flat. There is inflation worry. It's like cholesterol according to this news here. Commodities are best performing. That will be basically increase some inflation here. Generally, folks are talking about market pressure, inflation. That seems to be the theme here. And then let's go into the futures again and let's look at the bond market. As we look through the bond market here, let's go back here and look at bonds. So bonds are also coming down, as you can see here. That should help the market a little bit. But on the contrary, what's going on is, as you look through here, the interest rates are going higher. As the interest rates go higher, that will put some pressure on the growth names. So that's why some of the growth names in the technology and biotech, they are showing some pressure here. So we got to be watching carefully the inflation phenomenon that can apply some pressure on the stock market. Commodities are doing well. Crude oil is doing great. It's in the uptrend right now. We got to be watching carefully. Don't buy these oil and energy stocks on the way higher here. Wait for a small drop here. They're already doing great. We got to be careful here. And last but not least, gold is down, as you can see here. There is some pressure in gold. I would be willing to pick up some gold if it drops a little bit further. Pick up some quality names like the A Barrick Gold, ticker symbol GOLD, or GDX, or even GLD. I think those will be good defensive play, and we can go from there. So now let's go into uh, the stocks with a big price drop yesterday. So as you scan through here, I got the list here. The list is scanned, sorted by yesterday's drop. As you can see here, we got Jasper, big time drop, 13% drop here. Lodgestone Motors, again, big huge drop here, 11%. And we got CMTL, INFI, and so on and so forth. I think what, as a traders and investors, what we should do is really, we should look at what insiders are doing, what institutions are doing. That's our first cue. So as you can see here, Jasper, we got institutions buying Jasper, and as you scan through here, there is a very high short ratio. The short sellers are pushing Jasper stock down big time, and stock has been down, as you can see here, for 1 day and 5 day. Looks like this is a new IPO, so you don't see 10 day, 1 month, and so on and so forth. So it may be okay to just buy slowly. We look into this and see if it's worth buying. Typically, when there's a huge drop like this, I would sample it to begin with, buy a little bit slowly, see how it's going, then I can add more. Especially because it's a newer company, there is not too much history behind this. And then we should look at other names here like Lodgestone. This has been doing great a while ago, but now it's dropping. As you can see here, price is dropped like 1 day, 5 day, 10 day, all the way. So names like Lodgestone, you got to be careful. You can be a contrarian and buy some and take advantage, but don't buy a whole lot because there could be some issue with those type of strategies. And I would say, stick with the great companies with the positive, rule of 40 is nice sales growth, like INFI, INFI here. It's got sales growth, and we got institutions buying INFI here. And as you can scan through here, it also has got okay short ratio. Stock is doing not so great in 1 day, 5 day, but it's done great in 1 year. So there is some hope in stocks like INFI here, given it's got sales growth indicated by quarter over quarter sales growth and gross margin. So that's why in times like this, I would stick with fundamentally sound companies like INFI, VNTR, so on and so forth. Next, we'll look at a few more stocks that are dropped huge here and see what's worth buying. And there are stocks like Roblox here. This used to be darling of Wall Street when it became IPO here. I would probably look at some of the stocks like Roblox here, add slowly into the portfolio, and go from there. Next, we look at a few more stocks which have dropped big time. As you see here, one of my favorite stock is PAGS. It's a Brazil-based fintech company. Stock has done great in 1 year, 20%. Off late, it's been falling off the cliff. And as you can scan through, there is a nice sales growth in PAGS. That's why I think it's a good one to play here. I could, easily see myself buying some PAGs here, take advantage of this downturn in PAGs. And then as you scan through here, we got a few more. We got ACHC And Stitch Fix, same story. Nice growth here, nice sales growth, gross margin, satisfies rule of 40, and also high short ratio here. I've seen Stitch Fix going up and down, taking advantage of short squeeze and going up nicely. We could probably look at buying a little bit of Stitch Fix here and go from there. And we got few more here. I know few of you are big on big here, Winco Ventures. As you can see here, Winco Ventures, it's right now RSI is 44, tells you stock is oversold. And as you scan through here, volatility is high, stock has been dropping off of late, so it could be okay to hang on to be big for a little more and go from there. It also has a nice gross margin, which is 32% here. And we got few more here. I also like stocks like Nectar here, NKTR. Right now there is no sales growth, there is nice gross margin, and as you can scan through, RSI is a little higher. I would wait for a little bit pullback on the RSI. Next, what we'll do is we'll look at few more companies in a little more detail and look at the stronger candidates, because in this market we got to go after the stronger candidates and buy them into this weakness. So this list is really list of companies with a rule of 40 satisfied, meaning there's a strong quarter over quarter sales growth and gross margin. The combination of these two is greater than 40%. These are the really great companies, fundamentally sound companies. So if you want to buy, I think these are the good candidates, starting with INFI, little company with the 256 million market cap, price is just $2.90. Nice sales growth, and as you can see, a nice gross margin, and company not making money, net margin is negative, and a little more debt on the balance sheet. That's why debt to equity ratio is 1.2, and as you see here, there is a short ratio here, 6%, can cause a short squeeze, and it's done great in 1 year. So you could look at candidates like this. Even though I don't like the high debt equity, it's okay to buy a little bit and take it from there. And then we got few more here, VTNR, RVNC, PAGS, one of my favorite here, and Stitch Fix, so on and so forth. Even Columbia, COLM here, I think this has been doing nicely. Look at the institution buying in Columbia. Institutions are buying heavily, that's a great sign. Nice sales growth and gross margin, and also 1 year sales growth is also great, and it's making money. There is a positive net margin. So even the PAGS has got a positive net margin. In times like this, it's good to stick with companies with a nice net margin also. And as you scan through here, Columbia does not have any short ratio. Fundamentally good companies, typically short sellers shy away from those. And as you scan through, companies are not doing great of late. That's why all negative all the way to 6 months. But in 1 year, it's done great. And 5 year also, it's done great. And we got few more, as you can see here. We got AAO, FLDM, and so on and so forth. I think we should look at these companies here, give more importance to these, and go from there. And I also love Equinix here. It's one of those data center REITs, $760. As you can scan through here, low RSI. You know, if you can't buy Equinix stock outright because it's too high, right now you cannot buy call options because IV percentile is high. But you could sell some put spread underneath the stock price, take advantage of this high IV percentile, and take it from there. So what we'll do next is we'll look at a few more names here with the rule of 40 and low RSI. As you scan through here, I love stocks like Car Parts here. It's a great company, $14 stock. Insiders are buying, as you can see here, and RSI is low, IV percentile is low, and stock has done great for 1 year. But off late, stock has been dropping. It's good to buy some car parts here. Even Haynes brand is a good one also. I have seen this company going up and down a lot. Right now, Haynes brand is nice sales growth here, satisfies rule of 40. And as you scan through here, it also has a low RSI, which is 36. I would go with names like Haynes brand here. given in the Haynes brand, we also have institutions buying this company. And as you scan through here, you could look at some of these names here. Carter, I like Carter also. As you scan through Maxar into space here, stock has dropped off big time, low RSI. I could pick some Maxar up here and take it from there. And as you scan through here, we got a few more. Um, we got five below, again a great retailer. Stock has been dropping off late, good to buy some. Stock price is a little high, you could even do some call option here, buy some call spread and take it from there. And next what we'll do is we'll go one notch higher. Let's look at stocks with the low RSI and rule of 40, meaning fundamentally great companies, as well as net margin greater than 10%. I think in markets like this, we got to go after great companies which are making money. So these companies are really making money, and stock is dropped right now temporarily. So we should take advantage of this situation here. Top of the list, we got PAGS. It's really a Brazil-based fintech play here. Nice sales growth, gross margin. I like this. Rule of 40, easily satisfied. As you scan through here, look at the net margin here. Net margin positive means company is making money here. They're not one of those money losing business here. RSI is low. Stock has been falling off. I think we should take advantage and slowly buy and accumulate PAGS here. And we got Dick's Sporting Goods here. It's been doing great of late. I've seen this stock in 20s couple of years ago. It's come a long way here. I would slowly take advantage of Dick's Sporting Goods on the down days and slowly accumulate, no need to hurry. And Dick's also has a high short ratio, as you can see here, that can cause a stock to go higher. Dick's, even up here, stock has done great for 1 year as well as 5 years. So that's why no need to hurry, buy slowly, take advantage of this downturn and take it from there. And we got few more here stocks like Foot Locker. I like this one too. And we got a few more stocks here. Sun Power, low dollar stock here. Nice sales growth here. We could look at that one too. Even Health Peak here, PEAK. It's also a good one. As you can see here, nice sales growth here. And we got few more. I also like INCY here, Incyte. It's a biotech play here. It's also a good one. And we got silver play, EXK Endeavo silver here. That's also a good one here. So with that, these are the stronger candidates with the low RSI and rule of 40, meaning nice sales growth and also net margin positive. These companies can withstand temporary setback in the market and do well regardless. And as usual, keep a watch on high short ratio here. A couple of these stocks like Dick's Sporting Goods, SHLX have got high short ratio that can cause a short squeeze type situation. Along with we got Suzanne, and we got one more here, ENIC, same story, high short ratio. Even GGB here, I like this company also, has a high short ratio right now. That's a good situation also. So with that, let's now look at even a notch higher. Let's look at rule of 40, meaning strong companies with nice sales growth and gross margin and net margin greater than 10%, and also low debt. These are really sure shot. They don't have too much debt on the balance sheet. These can be good stocks to own as the market is pulling back heavily temporarily. Top of the list, we got PAGS again. PAGS is a great Brazilian fintech play here. I would slowly add PAGS into my portfolio at these levels here and go from there. It's got a nice sales growth, nice gross margin, and look at here, we got debt to equity here. There is no debt. It's a zero debt, nothing on the balance sheet. So these are the fundamentally good companies. They know the discipline here. They don't borrow money heavily to grow. And we got few more here. And we ST here, same story, nice stock, $41. Nice sales growth. Look here, nice triple digit quarter over quarter sales growth. And as you scan through here, low RSI. And as you scan through here, even the float is a little bit less here. I think this is also a good one here. For 1 year, it's done nice. Off late, it's been falling off a little bit. I would take advantage of this and buy some NVST. And we've got a few more here, ENIC and Newmont. It's again a gold play here. You could slowly buy some gold here. Newmont is a good one and slowly add to your portfolio. And look at ENIC here, $2 stock. Institutions are buying the stock. Nice sales growth and gross margin. High short ratio. That's again a good candidate to buy slowly and take advantage of this short situation here. And we got a few more. I like Incyte, EXK. All these are great companies. Even Pan American, it's a silver play here. Right now, it's down big. You could take advantage. And Zoom is a good one here. Off late, Zoom has been falling off the cliff, as you can see here. I would say if you're buying Zoom, buy very slowly, and there is no need to hurry here. I think they also had their merger with Five9 called off. That's not happening. That's why I will be a little careful with Zoom here and buy very slowly. And I love stocks like Regeneron, great play here. Stock has not done great for 1 year, but it's a one of those great stocks, biotech area. You could slowly buy and sock it away. And we got video game player here, Activision Blizzard. Again, a great stock. We could buy some Activision here and take it from there. As usual, also look at how is the short ratio here. ENIC and even LOPE, high short ratio. You could take advantage of that and do some swing trading type opportunities here. So with that, here are some rules here when to buy and sell stocks. Entry point perspective, look for RSI less than 55. You don't want to pay too high for the stock. You don't want to buy when the stock is overbought. And make sure on the balance volume is rising, so that way you know stock is going to go up. From an exit point perspective, make sure RSI is greater than 60 and on the balance volume falling. And always look for rule of 40 in these kind of markets, so that way you go after stronger candidates. And also look for low debt, and also look for catalysts like high short ratio, low float, institutions buying or insiders buying. Those could be good catalysts. And if it's a biotech stock, we could also look at the catalysts and number of drugs in the pipeline. That could be also a great catalyst. So with that, we also have options here. For the options, always watch out both IV percentile as well as RSI. When the IV percentile is low, you want to be an option buyer. When IV percentile is high, you want to be an option seller. So with that, thank you very much. Happy investing and trading. Please subscribe.